Hey, welcome to the Finance with Foss channel. Obviously, you clicked this video because you want to see what your payment would look like on a $300,000 loan. So I built this scenario with 3% down. Obviously, this is a first-time home buyer scenario where most first-time home buyers don't have a whole lot of money to put towards their home purchase. They utilize things like down payment assistance or gifts from family, or they find a way to save up. Another option would be seller pays now that the market's kind of changing. But taking a look at the whiteboard here quick, let's look at what a $300,000 purchase price would be. So we know our purchase price, as we stated, is going to be about $300,000. This is kind of like an average purchase price in the area. So I live in Minneapolis, pretty average purchase price for a first-time home buyer right now with the way the market is. We know our down payment is going to be 3% or $9,000. So 3% down is what you can minimally do in the sense of a down payment when you have a first-time homebuyer program using conventional mortgages. So FHA is 3.5, but we're not focused on that right now. We're just strictly looking at a conventional loan. So then we know our loan amount is this $300,000 minus the $9,000, so we get a $291,000 loan. This example, we know rates are going up, so unfortunately we're going to go with the old 6% interest rate. Again, you can buy down points to get lower interest rates. You can actually even take a higher interest rate to get credit towards closing if you so wanted to. But for this example, we're just going to focus on 6%. And then our term is going to be a 30-year fixed. So right now, ARM products are kind of coming back in vogue with the higher rates because ARM products tend to be lower than fixed rate mortgages. But when you're a first-time home buyer using 3% down, an ARM product is not an option. So in order to be able to use an ARM, you have to do at least 5% down. So with this example, we are going to have a principal and interest payment of $1,744.69. So this number never changes for the life of the loan. It stays on there. Since it's a fixed rate mortgage, it will stay on there throughout the life of the loan. It does not vary. So the things that can vary are things like insurance, private mortgage insurance, and the taxes that we'll look at. So a $300,000 home will probably have insurance about $140 a month. This can change if you're like adding certain things to your policy for coverage, or if the roof needs to be replaced soon, or different things like that. Just kind of a general average would be about 140. Then for PMI, I'm basing this number off of perfect credit with 2 borrowers. So that is, PMI is all done on a factor, but just for this example, the PMI payment is going to be $75.18. If you want more details on how that's calculated, I have some other videos on that, or you can obviously contact me, direct message me individually. Taxes, I'm just going to put $300. I'm not 100% sure what the averages would be in the area if you're not from Minneapolis, but this kind of gives you a general idea of $3,600 a year in monthly taxes. So we add all this up and we get a house payment of $2,259.87. So it kind of makes you wonder, does renting make sense over purchasing? We're seeing that this purchase with 3% down minimum, it's going to have a house payment, roughly about, let's just even call it $2,300. We know average rent right now in the area is a little bit higher than that. So rent on a 2-bedroom could be about $2,200. So let's switch over to the website that I got here and take a look at kind of what we're working with here. So switching over, we can see the average rent in Minneapolis, a beautiful downtown Minneapolis here, taken from the bridge downtown. If you haven't been in Minneapolis, this is a beautiful area. But just this website, apartmentslist.com, the average rent for a 1-bedroom is $1,500. An average rent for a 2-bedroom could be up to almost $2,300. So your rent your 2-bedroom apartment is renting for roughly what a house payment would be at $300,000. We can see that the Minneapolis rent trends, they're actually lower than kind of like other areas. So we see nationally rent has really shot up, and in other areas of Minnesota, it's shot up even more than Minneapolis of late. So it doesn't really necessarily matter in the sense of that, but you can see that there's kind of room for it to go. And knowing that a house payment of about $2,300 on a $300,000 house with 3% down can get you roughly the same thing, but have your own home, something you can gain equity in. So inventory by rent, we can see that this, if we're looking at the 2,000 to 2,900 per month, 18% of apartments cover that range. Apartment types, there's a bunch of obviously 1-bedrooms, with 2 bedrooms being the next. So it's just kind of, I want to give a kind of a quick look to show you kind of like what a house payment would look like at $300,000, what that would get you compared to what rent is going for right now. If you have any questions on this, obviously reach out. I'll probably do some more scenarios and try and do some more stuff like this. Hopefully this helps you get an idea of where you're at if you're looking to eventually purchase a home compared to what you're paying in rent.